Bitcoin just printed 81,083 on the screen, up 1.26%, and 90% of retail traders are already calling the next leg up. But I'm going to show you something most of them miss. The daily RSI is at 42 while price is $1,000 higher than 3 days ago. That is a textbook bearish divergence, and it is sitting right on a weekly supply zone. Today, you get 4 tradable setups, from conservative to aggressive scalp, and by the end of this video, you will know exactly why institutions are not buying this move. Let me give you the bottom line first. Bitcoin is neutral to bearish as long as price trades below 81,600 on a daily closing basis. The real pivotal level, the line in the sand, is 81,750. Above that, I will flip neutral. Above 82,200, I become bullish. Below 81,000, the short side gets activated. And below 79,812, that is today's day low, we are looking at a retest of 79,200 very quickly. Write these numbers down. I will repeat them later in the trade setups. Now let us walk through the charts exactly as I see them on my terminal. Start with the weekly time frame, because trend always starts there. On the weekly chart, Bitcoin is trading well below the MA20, which sits at 94,900. That tells you the long-term trend is still damaged. The weekly MACD is negative and the histogram is still expanding to the downside. However, the weekly RSI is 49.7, neutral. So we are not in a crash. We are in a dead cat bounce friendly environment. But a bounce is not a reversal. Move down to the daily chart, because that is where most professional traders set their bias. Current price 81,083. The daily MA20, simple, is at 81,440. Price is below the MA20, not above. That is a bearish alignment. The daily MA50 is lower at 80,970. That is the nearest support on the daily. The daily MA200 is at 79,343, a much heavier level. Now look at the daily MACD. The fast line is above the slow line, but the histogram is shrinking. That means the bullish momentum is exhausting, not accelerating. And the daily RSI, as I said, is 42.1, which, on a green candle day, is rare. Normally a 1% up day pushes RSI above 50. The fact that it cannot even reach 50 tells you that sellers are absorbing every bid. Now drop to the 4-hour chart, which gives us the immediate tradable trend. On 4H, we have a series of lower highs since last Friday. The most recent high was 81,618. Today's high is 81,752. Slightly higher? Wait, from your data, the day's range high is 81,752.5. That is only $130 above the previous high, but the RSI on 4H did not confirm. The 4H RSI peaked at 57 last week and today only reached 51. That is a hidden bearish divergence. The 4H MACD is now below its signal line, and the histogram just turned red at minus 12.2. That is a sell signal on the 4H time frame. Also note the 4H MA20 is at 81,331. Price already closed one candle below it 2 hours ago. If we get a second consecutive close below that MA20, the shorts gain control. Finally, the 1-hour chart, which I mostly use for entry timing. The 1H chart shows a clear bear flag. Price made a high at 81,750, pulled back to 81,050, bounced weekly to 81,200, and is now rolling over again. The 1H CCI is negative 212, oversold. But oversold in a downtrend is not a buy. In fact, it is a warning that the next bounce will be sold even harder. The 1H RSI is 42. Again, not oversold. So there is no momentum exhaustion on the buy side. The only oscillators that are stretched are the stochastics, 99.5, overbought, and stock RSI at 0, oversold. That mixed reading tells you that we are at a decision point. But the weight of the evidence from daily and 4H points lower. Now let me connect the dots with the news and institutional flow. Over the last 24 hours, the dominant headline was cooling U.S. Iran tensions. That dropped the geopolitical risk premium in oil by about 2%. And Bitcoin, contrary to popular belief, often trades as a high beta risk asset, not a safe haven. When geopolitical risk falls, both stocks and crypto tend to give back some of their fear bid. That is exactly what we are seeing. The S&P 500 futures are flat to down 3 points pre-market, and Bitcoin is struggling to hold the 81,000 handle. More importantly, look at the ETF flow data from yesterday. Net inflows were only $95 million, compared to a $300 million average over the prior week. That is a 70% drop. And the CME futures basis, the spread between futures and spot, compressed from 12% annualized to 7%. That means leveraged longs are not rolling. They are taking profits or getting flat. That is institutional behavior, not retail. Also, I want you to watch the correlation with the Nasdaq. Over the last 30 days, the 30-day rolling correlation between Bitcoin and the Nasdaq is 0.68, relatively high. But today, the Nasdaq is called down 0.5%, while Bitcoin is still positive. That is a divergence. And divergences between correlated assets usually resolve in favor of the weaker asset. In this case, if the Nasdaq sells off at the open, Bitcoin will likely follow. The only scenario where Bitcoin decouples to the upside is a fresh crypto specific catalyst, like a major ETF approval or a positive regulatory headline. We do not have that today. One more linkage. Gold is up 0.3% on the same Iran news. That tells you that real money is moving into traditional hard assets, not digital ones. When gold and Bitcoin decouple like this, it often precedes a Bitcoin correction, because the inflation hedge narrative flows out of crypto and into gold. So keep an eye on gold's 2,600 level. If gold breaks higher and Bitcoin stays flat, that is a bearish sign for Bitcoin. Now let us get to what you came for, the executable setups. I will give you 4 strategies, each with exact prices. You choose based on your risk tolerance. Strategy 1, conservative, high probability, low risk, small size. You want to sell a rally into the daily supply zone that has been tested 3 times in the last 2 weeks. That zone is from 81,600 to 81,750. But do not sell the first touch. You wait for a 1-hour candle to close below the 4-hour MA20, currently at 81,331. That close is your entry trigger. Place a limit sell at 81,320. Stop loss at 81,880. That is above the daily R2 pivot. Risk from entry, about $560. First target is the day's low at 79,812. That is a $1,500 move, nearly 3 to 1 risk reward. Second target is 79,200, which gives you 4.2 to 1. Once price hits the first target, move your stop to entry. Let the second target run, but only if volume increases on the way down. If Bitcoin fails to break 79,800 within 2 days, take profits early. Strategy 2, standard, balanced reward, wider stop. This is a pure retest setup. Wait for price to come back up to 81,200. That is the S2 pivot from today's data and also a previous 4-hour breakout failure level. You enter on a 1-hour bearish engulfing candle or a clear rejection wick at that level. Entry price 81,200. Stop loss at 81,680, which gives you $480 risk. First target 80,000 exactly. Second target 79,200. The first target alone gives you 1.6 to 1, but because the probability is higher, retest after a failed breakout, the expectancy is positive. After target 1 is hit, move stop to 80,700. Then let the second target play out. If price closes back above 81,600, consider the setup invalid and exit manually. Strategy 3, aggressive, countertrend bounce fade, very tight stop. This one is only for experienced traders. The CCI on the 1-hour chart is negative 212, oversold. Most retail will buy here. But we are going to sell the first weak bounce into resistance. Here is the condition. Within the next 4 hours, Bitcoin must bounce to 81,040, the S1 pivot level, but the 1-hour RSI must stay below 45. That tells you the bounce has no momentum. Enter short at 81,040 with a stop at 81,400. Only $360 risk. Target is 79,800. A very quick $1,240 profit. That is a 3.4 to 1 reward on a very tight stop. But note, if the bounce pushes above 81,400, you are out with a small loss. Do not re-enter. This trade works about 60% of the time in ranging markets. You need to accept that you will be wrong 4 out of 10 times. But your winners are 3 times larger than your losers. That is positive expectancy, strategy 4, ultra-aggressive scalp, for professional risk takers only. This is a breakdown scalp below the day's low. If Bitcoin breaks below 79,812 with a 15-minute candle that closes below that level, you enter short immediately at market. Stop loss is only $200 above, at 80,012. Target is 79,200, an $800 move. That is a 4 to 1 reward. But the catch, you must be in front of your screen, and you must accept that a fakeout could trigger your stop. The rationale, below 79,800, the next support is very thin until 79,200. Liquidity hunts often push price lower fast. I personally use this only if I see the S&P 500 down at least 0.4% at the same time. Without that confirmation, I skip it. Before you even think about placing any of these orders, go through your risk checklist. 1. Your total risk on this single trade should not exceed 1% of your account if you are conservative, or 2% if you are experienced. 2. Never hold a Bitcoin trade into a major news event. The next one is Wednesday's US CPI inflation report. If you are in a trade 30 minutes before the print, you are gambling, not trading. 3. Adjust your position size so that your stop-loss distance multiplied by your position size equals your predefined risk in dollars. 4. If you are using leverage above 3 to 1, you must reduce your size even further. And 5. Write down your exit plan before you enter. If you cannot write down exactly where you will take profit and where you will accept loss, you are not ready to trade. Let me give you one more layer that most YouTube analysts skip, the options open interest and the put-to-call ratio for Bitcoin. Yesterday's derivative data shows a put-to-call ratio of 0.65. That is low, meaning too many calls. When the ratio drops below 0.7, it historically precedes a short term top. Also, the largest concentration of call open interest sits at 82,000. That is the magnet. Market makers will try to keep price below 82,000 until those calls expire worthless unless there is a huge catalyst. On the downside, the largest put open interest is at 79,000. So there is a gamma wall at 79,000. That means if we break 79,800, the next stop is 79,000, but then it may bounce. Your short target should consider taking profits before 79,000 exactly. Additionally, the funding rate on Binance is currently 0.005% per 8 hours. That is neutral. Last week it was 0.02. So the crowd is not overly long. That actually makes a short trade safer because you are not fighting a crowded trade. When funding rates are high, short squeezes happen. Here, funding is low, so any move down will likely be slow and controlled, perfect for swing trades. Now let us double-check the risk-asset correlation. The S&P 500 is trading at 5,200. The VIX is at 15.3. Complacency. Bitcoin usually rolls over when the VIX spikes above 18. No spike yet, so the immediate drop may be limited. But the Nasdaq's inability to make a new high is key. Look at the daily chart of QQQ. It is forming a bearish rising wedge. If that wedge breaks, Bitcoin will likely see a $1,000 drop within 48 hours. I am watching the 5,020 level on the S&P 500. Below that, risk assets start to unwind. Bitcoin's 79,200 level aligns perfectly with that scenario. So your trade should be sized for that possibility. To summarize, Bitcoin is in a bearish divergence on the daily, trading below the daily MA20, with weakening momentum on the 4H MACD. The key resistance is 81,600 to 81,750. The key support is 79,812, then 79,200. My base case is a move down to 79,200 over the next 3 to 5 days, unless the S&P 500 rallies above 5,300. Tomorrow's focus, the US CPI report at 8:30 a.m. New York time. The whisper number is 3.1% core. If actual comes in above 3.2, expect Bitcoin to test 79,000 within 6 hours. If below 3.0, we could squeeze to 82,000 temporarily, but that squeeze would be a sell opportunity for my standard strategy. Now I want to hear your pin. Are you long or short? And what is your exact invalidation level? Post it in the comments. Do not just say bullish or bearish, give me a number. Let's see who has a real plan. That if you made it this far, you are part of the top 1% of traders who actually think in probabilities. Hit like if you want more of this depth. Subscribe and turn on the bell. We publish 8 assets every day. This is Alpha Market Meridian. We do not guess. We measure, we execute, and we let the data speak. See you in the next breakdown.